Hi, everyone, and welcome back to the 2018 Hack Summit. That was a great session where we learned all about Byzantine fault tolerance from Lehman Baird. We really appreciated that. And now we're going to talk about decentralized exchanges and the future of where blockchain is headed in that regard. And we're very lucky to have John Piotrowski here from the Ocean, as well as Alan Curtis from Radar Relay here today to join us in learning about decentralized exchanges. So thank you guys so much for joining us today.
Thanks for having me.
Yeah, excited to be here, Ed. Thanks for the invitation.
Sure. So this is going to be kind of a free-flowing conversation. I'd love to give Alan and John a chance to introduce themselves and tell us a little bit about themselves to set the tone. Then we'll jump right into the material. So, John, you want to start?
Certainly, and hello, world. I apologize for the loud Hawaiian shirt. I'm coming back from a wedding today. So usually I'm not dressed quite so crazy, but, add a little bit of flair. As Ed mentioned, my name is John Piotrowski. I'm based in Brooklyn, New York. I'm CEO and co-founder of The Ocean, which is a 0x relay or a decentralized exchange. And in this context, meaning, I'm not sure how familiar folks are with the concept, and we'll get into this, but non-custodial exchange. And that's a really distinctive concept that blockchain uniquely enables, this idea of no middleman needing to take possession of assets if you're trying to move them from point A to point B. It's not something that happens on centralized exchanges today. It's not something that happens in my old world, the traditional financial world either. So, prior to this adventure, I led strategy, execution optimization, a whole host of other projects for Goldman Sachs. Don't hold it against me, but, I've been in the traditional financial world for some years, and something I find interesting from a decentralized exchange perspective is if you build it the right way, you can, not just reduce cost and increase liquidity and do a whole host of beneficial things for marketplaces. You also avoid Lehman Brothers and financial crisis 2.0, which actually is something that I think we all want, including regulators. And so we can talk about, something I'd be interested to discuss with, Alan and the rest of the group is how to think about regulation, not just in financial services regulation, not just in the decentralized exchange space, but larger blockchain space. I think, especially if somebody who comes from that more traditional world, I have a pretty unique perspective on it.
Great.
But yeah, that's our story.
It's fantastic. And Alan, would you like to tell us a little bit about your background and your company?
Sure. Yeah, Alan Curtis, CEO of Radar. You might be familiar with Radar Relay, our first product, which I'll talk about in just a minute. My background is not as a finance guy, not as an engineer, but as an operator. So when I approach the space, I approach it like many of you listening in, which is from a beginner's mind, right? A first principles perspective of what the heck's going on here? How does it work? And I think that's been a tremendous asset for this space, right? Because there's so many people building solutions, looking for problems. And so when we approach Radar, and happy to share the origin story if you guys want to hear the longer version, but when we approach with the end in mind. And our team has always lived in the future in a sense, and we're trying like hell to work backwards and build that future we see. And so our first product, Radar Relay, which popularized this category, created this category of a relayer, which we're going to get into the details under the hood, I'm sure. Launched back in August, and we've been growing ever since. And I do think, Ed, it's worth just to go off script a minute and just talk about what the heck is decentralized exchange, because I know when I first heard about it or started thinking about it, it's very confusing. So I think just to zoom out, 30,000 foot view, you think about decentralized exchange as a verb, not a noun. And it's important to understand that exchange exists on a continuum. And there's been this migration of technology, this evolution of technology. So in the early days, right, when Bitcoin had first launched and there was only a few thousand folks trading, the exchanges were very, very fragile, right? There was these early centralized exchanges. As you know, many were exploited, unfortunately, for large hacks. And that world of centralized exchanges existed for quite some time. And they got more and more sophisticated, like Circle and Gemini and Coinbase. to have much stronger security models, but ultimately still centralized and still custodial. And so some wicked smart entrepreneurs, specifically Zach from Ether Delta, actually built the first smart contract driven decentralized exchange. He used this escrow technology from Ethereum, and instead of depositing into a centralized exchange, you deposit into a smart contract. And we saw sort of a series of Me Too's or iterative designs on those smart contract based decentralized exchanges. And then the next spark, right? So if the first spark was Ethereum and this escrow, the next spark was the 0x protocol with both John and I's business are built on top of that, which we'll talk about that here in a little bit. But that allows for relayers. And this era, first time in history of trading crypto to crypto, wallet to wallet, peer to peer. And so we're really excited to alongside John and many of these other relayers to help bring this wallet to wallet technology to bear.
That's a great explanation. Thanks. And so maybe John, if you have any thoughts on this, like what are some of the problems that decentralized exchanges solve? And do you think there's going to be a role for centralized exchanges in the future?
Yeah, I do. And I think it sort of depends on what problem you're fundamentally trying to solve. And so, and I'm seeing some of the chat, on the screen as well, and seeing some of the back and forth, which is great. So, please send questions and comments. Just the word decentralized exchange means different things to different people. The way Alan's talking about it, the way I talk about it is really around custody, meaning who owns what at what period of time. The concept of, hey, instead of depositing my goods or my assets, to a third party who then makes a swap between person A, person B, why not just use blockchain as it was designed to be used and just have a smart contract facilitate that trade? And if you deposit in a smart contract and everything's well written, then I don't need a third party to take ownership. I do the swap, there's no risk, it's cheaper, and away you go. How you get there, like that concept of no custody execution means the funds have to be put, as Alan said, in escrow. I think that's the right way to think about it, and they're swapped. How do you match those people up, and how do I push them efficiently to the Ethereum blockchain, in our case, to settle? Those are interesting problems in and of themselves. We take different approaches to it, and how centralized or company specific those are depends on what problems or what users you're trying to think about. So that's one comment I would make is, I think there's a difference between no custody settlements and escrow, and that's really the core problem of decentralized exchanges. I think centralized exchanges I think of them as almost brokerages where I go and you're really good at converting, dollars, yen, whatever it is, cash into assets, because right now you need somebody to do that, right? And so for the space to really grow and expand, somebody has to do that, and I think there's things that both sides can learn from each other, right? I think, that sort of, meeting in the middle will be sort of interesting over time. But I think, the use cases are potentially different. The customer bases are different between all these different projects. And as a result, how decentralized or not reliant on a single trusted party for certain aspects of a transaction are also different.
Yeah, well said. And I'll piggyback off a few things there. So I think to echo your points, right? There's no hate on centralized exchanges here. They're critically important to act as the fiat gateway to move 0 to 1, fiat to crypto. So it's kind of, think of it as the on-ramp to a highway, and think of the technology that John's building, that we're building, as the super highway of how crypto relays or flows between dApps, between peers, between relayers, automated traders, market makers, whatever participants want to play in that token economy. They're going to go through businesses like ours. They're not going to go through these fiat brokerages. Now, that being said, there is absolutely a place there, because I don't have the capital. I don't have the regulatory relationships. I don't have the banking relationships to handle being a money services, going through And so we're really happy to have this synergistic relationship with some of these larger companies, because we certainly wouldn't be here unless Coinbase was onboarding the world to crypto, so we can onboard the world to the token economy. And happy to go sort of more in detail on the trade-offs, because I know we have a lot of engineers and developers here who are curious about speed and security models and whatnot.
Yeah, I think they'd appreciate that. So any thoughts either of you have on that would be great.
Sure. Yeah, maybe John, I'll touch on a few and then can take over. So like I mentioned earlier about this evolution of centralized exchange technology to centralized smart contracts and now relayers, the technology in the early days was fragile. Somebody needed to adjudicate those transactions. Often you needed a safe sandbox to roll back permissions as necessary. So you see that same early stage sort of protozoa era in the petri dish of our businesses. It's early days, right? The Ethereum, the blockchain we're built off of, built using, it can be slow, right? It's not built for the super high frequency trading. It is not the sort of highly low latency, high speed trading environment that a lot of these automated traders are looking for. And so we have decades. We have decades of work to do before we can onboard this world to the token economy, and we have years of work to do on Ethereum scalability and other blockchain scalability. And so for us, for John and I, we are absolutely directionally correct in building global liquidity pools, getting orders without borders, driving decentralized exchanges of verb. But in 2018, it can be tricky to onboard the liquidity here and now. So you have to bear with us and sort of watch as as our businesses continue to grow to get to the point where we can compete on speed and latency.
Yeah, I mean, I think something, and Alan just started to touch on, something I'm very conscious of is the concept of bridge, both from a time perspective and an industry perspective. And at the end of the day, the crypto community is still pretty small, right? Like Alan and I were joking before this call, like I'm sure I will see him many times a year for the rest of my life, whether he wants to see me or not. So the question is, how do you, and conceptually, I think most people agree, and I'll speak a little bit more from at the end of the day, an exchange is, or a relayer is really sort of a financial services concept, but blockchain, you can start to expand it into industrial use cases, and this idea of sort of that Filecoin idea of being able to spend to run an application or service is a really interesting concept in the steady state, 1,000 years from now or whatever it is. I think people agree that this sort of safer, faster, cheaper global liquidity pools, everybody wants that. Regulators want it, institutions want it, us in this chat want it. And the question is just, how do you build there? And so you have to build a sustainable roadmap to doing it in such a way that you think about bringing people who aren't in the space currently into the space. And maybe you don't build the ideal solution just yet, but a solution that steps into it. So something that, we think a lot about from an engineering perspective. We can get into some of the finer points here. Non-custodial exchange or a decentralized exchange means you, as the individual, have to show up with a thing that manages your private keys for all intents and purposes, right? You can do it via MetaMask or Ledger. Those can be some great options for people, but they're not great options for other types of people. That's one of the reasons lots of people use centralized exchange, because I don't have to manage actively my private keys. So maybe there's a way to get the benefits of no risk settlement, cutting out some of the middlemen and the costs associated with it, but also having sort of this feel of maybe somebody else is helping me manage my private keys. And maybe in 1,000 years, everyone will manage their private keys just the same way that people have passports today and didn't, 10,000 years ago. But I think to echo Alan's point, I think being a really good engineer in this space is about seeing not just where you want the end state to be and building that end state, but building that bridge or that runway to that end state. And so that means you have to be a good engineer who knows lots of different things about the industry, or maybe you're trying to bridge to. Like myself, I'm a financial services person. It helps in some contexts, and it doesn't help in others. But I think that background, for us, is important to be conscious of and thinking about how to step forward over time.
Yeah. So one of the central ideas I think we're both deeply aligned on is we see this future state, right? And you guys might see it too. You might have to squint and turn your head, but you see this future state, and you just have to work backwards and build the products together. And so I think this is a good time to introduce Relay, right? Or Relay. Or why are we called Radar Relay? If our company is Radar and we're building a bunch of products, what is this first one? And so we thought long and hard about, were we going to be Radar Decentralized Exchange? We're going to be Radar Dex, right? And there's all these different companies popping up with sort of Dex in their name or puns on the word Dex. So we thought long and hard about this just transition, right? Centralized exchange, smart contract based decentralized exchange, and what's next? What's that category? And we ripped a page out of 0x's playbook, right? The protocol that we're built on, literally. And they, from an engineering perspective, they used the term relay. And so we thought that was an elegant description of this implicit market of peer-to-peer trading. And so we worked with them, we worked with John, we worked with all these other relays to create this category. And when you think about category creation, it's a very disciplined and defining act. And being precise is critically important. So if you look at new categories like Keurig introducing the sort of the pod coffee, or Airbnb in the sharing economy, so as they define these new categories, it's purposeful. So when you define it, you frame the problem, you create the vocabulary around that problem, and then you own the solution. And so we thought long and hard about that. And there's some writing we've done around why Relayer. And although that's not, there's some cognitive dissonance there because nobody's heard that word before. Why did we do that? It was based on data, based on experience. And then most importantly, the flip side of category creation, the opposite of category creation, is stewardship and education, right? To John's point, to welcome the 10 billion people on the planet to this token economy, you've got to roll out the red carpet. You've got to create a soft landing. And so we spent a lot of time trying to create educational pages and concepts and videos and graphics and design to meet people where they're at. Instead of asking people to manage their private keys, and instead of asking people to learn, go read the Bitcoin white paper and then show back up in the ecosystem, we think long-term, it's about abstracting away the complexity, just like a credit card or a password, or I think John used the passport analogy. That's the goal and end state. But right now, right, we have to work with what we have. And so you can think about Radar long-term is really about accessibility to the space and onboarding to the space. Our first product, which happens to be in the exchange space, right, as a relayer.
Great. So these are great. This is a great prelude to the next topic, which is that you're built on 0x. Maybe you guys could give us an overview. Maybe John, you want to start with this one on kind of what is the architecture of 0x from an engineering perspective? How does it work?
Sure. So the way I think about it is it's effectively a smart contract escrow service where, and I think this, again, I'm following along on the chat, and we can kind of take a little bit of a, I think this is a good time to get into the specifics of how trading something from myself to Alan works in sort of an old centralized context versus a 0x or smart contract context. So, typically any centralized exchange, just to remind folks, let's say Alan and I get matched up in an order book, and I want to buy, one apple for one banana, and Alan is willing to meet me and make that exchange. In centralized exchanges, not just in crypto space, but in traditional finance space, Alan and I, for most of the time, never meet. We never swap. It actually goes to Goldman Sachs. As an example, Goldman Sachs takes both things at the same time and says, okay, well, now I have both things. I'm going to give them to the two people who said they wanted that trade. Well, lots of things can happen and go wrong when that person sort of grabs the two things. Trying to do that at the same time is really hard, in not just for Binance or Coinbase, but for NASDAQ. And so it's because of all those issues, there has to be a better way, right? And if you think about blockchain or smart contracts, instead of having a Goldman Sachs in the middle, you can have a 0x in the middle. And so 0x says, okay, well, basically what you can do is create a contract or a cryptographically approved and signed schema that says, hey, Alan and I want to trade to these parameters. Instead of giving a third party that has to hold our hand, we can sign the individual transactions. They can be put in escrow. And then once the blockchain updates, where at one point it was one asset was with me in my wallet, and then the next block is with Alan. And so I think the concept of decentralized exchange is interesting in some sense that it took us many years post, Satoshi to get to the point where this is actually a viable concept. Because in some respects, it should be the first concept that people thought of, which was, okay, smart contracts, no intermediaries for money. Let's have a no intermediary for exchange too. Let's use smart contracts for the natural ability. So 0x, specific to Ethereum, in the Ethereum chain is that smart contract system. It's a protocol, but it basically creates a set of conditions such that if both parties meet these conditions, they can put their funds in escrow. And then when the Ethereum blockchain updates and blocks are mined, it's swapped from wallet to wallet. And by wallet to wallet, that really means your accounts on the Ethereum blockchain, mine goes down one, Alan's goes up one. So that's the concept specific to 0x. Something we can talk about maybe in a little bit later is how, what does that mean for other chains? We're talking about Ethereum in this context. But this conceptually, I think, is not, it's sort of a natural outgrowth of what blockchain is, which is why it's fascinating to me, that it's sort of, I think one of our co-founders always puts it, why aren't we trading blockchain stuff on a blockchain? And we're relying on big, individual companies, Coinbase and Ladder, to move things from point A to point B. It's a repeat of the old world. Something like 0x can help solve that.
That's great. Thanks. Alan, any comments on that?
Yeah, maybe just a few. Yeah, that was well said. It's always neat to hear other people explain the protocol as I pick up new ways to think about it. For me, 0x was part of this problem we were trying to solve. So, as you remember, we talk about our business as not bringing solutions to problems, but actually looking at problems and then thinking about the solutions. And so we identified this core problem that people were clamoring for self-efficacy and agency and wanting to trade on their own terms without losing custody. And so we actually started thinking about how to build that. And I haven't shared this before on a podcast or an interview or any of that. So this was way back. This was like 20 crypto years ago in like August of 2007.
Hold on a second. We have to define what a crypto year is. How long is
I don't know. I just made it up. It's like 2 years in real life. Feels like one.
It's got to be at least a dog year, right?
Yeah.
If you work on a crypto project for like 6 months, you're basically the old gray hair within the organization.
Yeah. Yeah. So we actually started to think about how to build this, and then we had sort of a connection to the 0x team actually through one of their advisors, and we heard about the project and we stopped the press. Everything came to a grinding halt, and we found an incredibly elegant design that was light years ahead of where we were at in our development cycle. And so instead of building out something in a silo to handle sort of this non-custodial trading, we decided to use this protocol, and we got to know the 0x team. And so just think of 0x as, you can call it a protocol, that works, but I think of it as two parts. The first is messaging. So you cryptographically encode your order parameters. I want to buy XYZ token. I want to buy this many of them, and I want to keep that order live for a day, 2 days, whatever. You take all those order parameters, cryptographically sign them. That's your message. And then 0x also built a set of pipes that those messages flow through, right? And they can go from wallet to wallet, from peer to peer, or they can go from dApp to peer. They can go, anybody who wants to use this open standard, right, this interoperability standard, can tap into or use that protocol. And the beauty of how 0x sort of tied a bow on this whole protocol is they created a token. And now many people are skeptical of tokens and many people don't see use cases. But in this case, the token is to be used for the purpose of governance. So if one of those pipes gets rusty, you're like, hey, that pipe is PVC and I think we're ready for steel, or I think we're ready for aluminum, or there's this new plastic we want to use. We all get to vote, right? John's business, my business, anybody who is using that protocol, that interoperability standard, we get to use those tokens to say, hey, I'm ready for a new pipe, or actually don't upgrade those pipes. Current pipes work great. And so we think of it as just an elegant modular way to drive this interoperability or this standardization that this industry critically needs if we're going to be successful.
And on that note of the industry critically needing this, so we've got a bunch of engineers in the audience. I would say the majority of the audience are engineers. How do you imagine they would be tapping into your services in the future from a practical perspective? Like what types of applications would they be building that would tap into this? And what is their actionable step that they would take to tap into your technology?
Happy to go, John. You want to take a crack at it?
Yeah. I think, something we think a lot about in this decentralized economy are actually sort of two sort of separate streams. So one is the idea of if we want to live in a world in which, and I think Filecoin to me is just always the example that sticks out in my head. I think it's a really powerful idea, this idea of, if you had extra server space and you wanted to rent it out and to use it, that'd be fantastic, right? It actually is more efficient for the world. It leads to a better outcome and people should be compensated appropriately for it. Well, then the question is, well, how do I create a system or a mechanism in which, as people, the reason they're kind of called tokens a little bit is sort of that subway token idea is people pay to use this thing to this decentralized protocol. How do those tokens go back into circulation? And how do I, as somebody who wants to use Filecoin for the first time, use them? So it's a pipes problem, and it's a if I'm building a D app and I want to have a true utility token that people actually want to use and need to use to access this protocol, then I need a way for people to get to it. So that's one use case. Is if I'm building a decentralized application and I want to tap into a user base and I need users that need this token, they need a place to go buy it. The second is a more financial services context, and you hear a lot of debate about this. And I think where I'm going is I kind of think of a little bit the crypto world and sort of in the token world in two worlds of you have sort of the native cryptocurrency decentralized application token. That's what I just kind of talked about. Then there's this idea of, the way I always put it, is old stuff in new format. There's lots of buzz, for example, around real estate. There's no reason that someone couldn't tokenize and sell a fraction of real estate in a new format. And there's lots of benefits to that. And so the question is, well, how do I do that? How do I build a bridge to the old world? What's the contract specifications? Those types of things. And I think especially there's been a lot of buzz this year, and I think there'll be continuing to be more buzz about the sort of tokenized asset, securities tokens stuff. It's a little bit more of a financial services bent to it, but I think the technology aspect is quite interesting because you get some really good and powerful outcomes. Something I'm super interested in, and just as an example, and that second point is affordable housing. Again, I don't think most people would view more affordable housing as a bad thing, right? Well, why don't more affordable projects get built? It's because you need somebody with $50 million or $100 million to build that thing. It's a hard ask. It's a lot of money to put up for something. Token economics actually are a pretty interesting application of that. Well, then what's the technology behind doing all that type of stuff? And so I could see, if you're an engineer looking at this space and how you would interact specifically with 0x or DEX, those are two examples, I think, liquidity or distribution for your tokens for a DApp, or, how do I think from a financial services perspective, older assets in a new, more efficient format are two interesting applications.
Thanks. And Alan, any additional thoughts on that?
Yeah, and I'll try to focus side. So perspective, we take the approach that anything that can be tokenized will be tokenized. So if you don't agree with that statement, right, the rest of this is you're going to find fault with. But if you believe that, right, which we do with deep conviction, high conviction, then we're moving towards a token economy, right? So this is the fifth economic system, very similar to a market economy where the unit of account or the medium of exchange is in fact a token. Now, in terms of what kind of tokens, there are hundreds or thousands of tokens, but really they boil down to four categories. The first I've heard a lot about lately, which are utility tokens. So think of software and applications. Security tokens, which John just talked about. Think securitized assets, I think called old world or traditional assets. Currencies, right, which is what crypto is designed to be. The original implementation of Bitcoin, stable coins meet that criteria. And then the fourth is collectibles. You may have seen this phenomenon of CryptoKitties trading and breeding these digital scarce cats online, right? So to reiterate, utility, securities, currencies, and collectibles. So you believe everything's gonna be tokenized. You believe in the token economy, which means it's those four assets. Then somebody needs to build the means of connection, right? And it's either going to be mediated, AKA centralized exchanges, or peer-to-peer. And we believe the best implementation there is a relayer. So anyway, so that's some table stakes. So now in terms of implementation. So as engineers, you probably, you're probably using, maybe some of you are using, you were coding before Stripe and you had to do the hand-to-hand combat of handling PCI compliance and working with these legacy banks. And then Stripe came along, right, with 7 lines of code. It made your life 100x easier. And all of a sudden they removed the intermediary, they abstracted away that complexity. The user had a very managed, very tight, precise experience. And under the hood, Stripe was doing some funky stuff with their API tools. So we see this world, right, this tokenized world following the same playbook. History doesn't repeat itself, but it sure as hell rhymes. And we think in order to create this token economy where all these decentralized apps or dApps as they're known are proliferating, you as a user should not be expected to show up to dApp number 985, go to an exchange, go to a relayer and buy that, hold it in your wallet, put it under your pillow, put it in your ledger, and then go over, navigate to this dApp and engage. You should just show up and it should just work. And so that layer of abstraction or managed user experience is what these global liquidity pools that John and I are working towards, that 0x is working towards, that's what that allows. And so we call that internally token processing, just like Stripe nailed payment processing. So our liquidity pools will be shared, will be open, and we'll create these managed user experiences. So I think from an engineering perspective, it's a great analog to something that we're not quite ready to do as a business at Radar yet, or as a space, because we're still early and there's less than a dozen dApps online, but we're going in that direction very quickly.
That's a great explanation. Thank you. And so let's say the future pans out as we're talking about it, where decentralized exchanges and global liquidity pools are leveraged, where you don't have to go to a centralized exchange to acquire a token, and it's a much better user experience for the user. And the user can, very quickly transform their fiat currency into an arbitrary token, spend that token in a brief flash of an instant, and then immediately that token is available for another party to use. In that world, don't we run into the problem where we don't need as many tokens for these services to exist, because the tokens are no longer held by the centralized exchanges or held in people's wallets. Rather, they're spent and they're made available immediately for someone else. So this is basically the token velocity problem. So could we be theoretically causing a challenge where some of these services that are using decentralized exchanges could actually have their tokens become devalued because fewer tokens are needed to operate their network under this new world order? What do you guys think?
I can, John, I'll chime in. This is something we talk about all the time. So that's a big can of worms. So first of all, at a high level, the answer is yes. And that's what happens. That's what happens with technology, is the strong survive, right? It's evolution. And there is going to be tokens that have been created, or there already are plenty that don't have true utility, don't have true usage, aren't necessary. And maybe stable coins are fine to use. So absolutely, I agree with that premise. And second, there's a deeper question there, which is about our relationship with value and what can be tokenized. So we get into pretty funky ground here when we start talking about attention being tokenized, right? And you start talking about micropayments and how value can transfer across your engagement online. And so it's really hard for us to pontificate, on sort of what will be tokenized and how it will be used, which is why we've built our business, right, our moat around just providing that liquidity and providing the rails and the infrastructure. And it's up to these incredible entrepreneurs and engineers listening in to figure out what has real utility and what must be tokenized in order to get to that token economy and what is irrelevant.
Yeah, I mean, I think I think our thoughts are pretty aligned in this space. So that there's a difference between price and value, right? And like people are always concerned about price in this space. As somebody who, facilitates trading, I am to a lesser extent where at the end of the day, what's going to hold long-term value are, things where, a token, as Alan said, makes economic and operational sense. And blockchain just is not a solution for every problem. I mean, I think that's the thing that if you're getting into this space, you hear the most is, critics saying, blockchain's a solution looking for a problem. I'm not in that camp. I think there are real use cases for lots of it. Is it for every use case? Probably not. And so as a result, will some things that, that had value at one point, might have less value in the future. Yes, maybe they should have never had value, or a token was not a good structure for them. So I think, people should be conscious, especially if you're an engineer getting into this space, thinking about the problem first. And blockchain is one of the toolkits, just like JavaScript or C++ or Python, that I have available to me to solve a business or consumer problem. And I have to think through what's the best technology for it, not choose a technology and then look for a problem in which to use it. And so I think that's something that I know if you talk to, Alan and I were talking about Consensus, which was the big conference in New York earlier this year. I think at lots of conferences and events, the technology people always kind of tend to gravitate towards each other. And I think really it tends to be the difference between people who are thinking problem first and not blockchain first. And I encourage people always, as they get into any technical space, that you think of technology as a toolkit to solve a problem, not in and of itself something you're trying to mold to fit a specific case.
Yeah, that's a great point. And just to riff on what you guys said there, I mean, assuming that this comes to fruition and the strong do survive, as Alan pointed out, we actually may be causing a somewhat of a recession in terms of the value of the tokens that maybe aren't solving deep problems, and maybe the tokens aren't needed as much in a fundamental way. And if investors and financial folks have poured tons of money into these tokens, into these companies, there's a risk that this may actually cause a crypto winter for the rest of us, even for the legitimate projects, which may endanger the financial health of those projects. So are you guys worried about that at all? Has that crossed your mind?
Yeah, go for it, John.
Yeah, it does. A couple of different things I wanted to say, and I think it's a very interesting point, right? Of, and I think this sort of dovetails to a little bit the regulated and regulation game. Tokens, the current, especially from a DEX perspective or an exchange perspective, this idea of governance and different economic models for tokens, they're all really comments on, marketplaces. And if you're a blockchain-based person, you're probably a libertarian to anarchist in some respects type of person, where you think the market should sort of dictate how things work, and we as individuals shouldn't be reliant on third parties. We should collectively make decisions. That's a market decision, right? That's no different than, sort of the stock market. Certain companies go up, down, left, right on a daily basis based on the quality of the decisions those companies are making, in theory, right? And then there comes a question of how well functioning is that marketplace. If you think about, whether you're an investor, an engineer whomever in this space, you want to separate the wheat from the chaff, the good projects, the strong survive sooner rather than later because it will make the space in general grow, right? Well, one way you do that is by having a well-functioning marketplace. So something we think a lot about, and I know others in the general exchange space too, is what does that mean in a decentralized context? If you think about the mandate of the SEC for a little bit, the stated mandate of the SEC is, price transparency, good capital formation, and fair marketplaces. I'm paraphrasing a little bit, but that's basically the mandate. Again, I don't think people would necessarily disagree with that mandate. You might disagree with the specific implementation, but conceptually it makes sense. And so I tend to think that, a crypto winter, quote unquote, is no different than winters you see in other marketplaces, in other projects, like you saw in 1999, 2000 internet. I think people look back and think some of the stuff going on back then was crazy too. Didn't mean that Google didn't happen. Didn't mean that Facebook didn't happen. And so I think, I would be, if I were a betting man, I think you're going to see some of the same dynamics here. I think you might see them a little bit earlier, perhaps, than maybe some other industries, because the nature of this business, this blockchain business, is decentralized, which is by its nature marketplace driven. And so, you should see, I would expect, more volatility and perhaps a faster cycle through some of these peaks and valleys than you might see elsewhere. That's just a conjecture.
Yeah, I'll weigh in on this one too. So yes, capital is being deployed at a maybe higher than average rate for the installation phase of innovation or new technology. And so there's an entire book. I'll actually drop it in the channel here for everybody to listen to. There's an entire book called Technology Revolutions and Financial Capital, looking at bubbles and sort of these golden age eras and industrial railroads and IT. So I think blockchain follows suit. And just like I said before, history repeats itself. History doesn't repeat itself, but it sure as hell rhymes. So we're seeing that. We're seeing a frenzy of investment, and that's subsidizing innovation. That's subsidizing people like us, right? For him to leave a senior leadership position at Goldman and come start something, right? That takes frenzy. It takes investor dollars. It takes focus. But then, of course, there's people are going to lose money, right? Think like you described, a winter, a bubble bursting, what have you. But that is critically important to prune the market of people who don't have grit and don't have conviction to see the deployment phase, right? So there's the installation phase where the capital flows in, and there's the deployment phase where the train tracks are laid, the scaffolding is laid, the roads are built. And that's the phase that I care deeply about. I do think there's sort of two pieces that are often overlooked. So first is that we've already had a crypto winter, right? For like when Coinbase launched, I think Coinbase is 8 years old, 7 or 8 years old now. One of my co-founders was one of the first data science hires there, and he saw part of that, right? So for years, Coinbase wasn't the sexiest unicorn to go work for. It was a hardworking startup that was looking for that product market fit, and then it sort of took off. And I think we forget that they made it through that period of austerity and emerged stronger for it. So that's one piece. And then the second, what does scare me though about this period of austerity that's inevitably coming, just like in any boom or bust cycle, is it changes the dynamics for people like John to leave their positions and come and work in the space, right? The senior engineer at Dropbox or the financial algorithmic trader at Goldman, they're not going to jump ship to an industry that is maybe struggling. So it does make a new talent harder, but it makes the current talent have higher conviction. So I'm not concerned. I think it's okay if some investors get burned a few times and makes them pay attention to first principles on making good investments.
Yeah, I mean, I think that's a fantastic point. Not just the investor piece, but the human capital piece of no matter what you do. I'm somebody who there's we talk a lot about history. Alan said as well. I'm somebody who grew up in a post mortgage crisis, post 2008 financial world, and there what happened? A lot of people didn't know what they were buying or selling. Had a huge bubble. It popped, and now people are a lot smarter for it in the mortgage industry specifically, right? Like sort of the same thing here, where there's a lot of hype around blockchain, and rightfully so, because if done well, it's transformative. But some of the themes that we keep talking about, Alan and I, are defining problems correctly, understanding what you're buying or trying to use this application for. As somebody who's trying to build a responsible platform in which to trade things, I don't want people on my platform necessarily that don't understand what they're buying. I think it's necessarily bad for the industry and for the individual, right? And so that's no different than, looking at other financial products in different marketplaces, or if I don't understand, if I'm taking the mortgage out on the house to buy the new car in some respects, right? And so, I think this idea of education and educating people in the space, like we're trying to do here as best as we can. But, I think it's been interesting to me as somebody who, left one industry for another here, the conversation, how it's changed over the last few months, where there's, this crypto winter and people, again, everybody's focused on price, is coinciding with, I think, a sobering of people taking a step back and saying, okay, from an engineering perspective, what are the problems we're trying to solve? Is blockchain the best use case for it? Is the design of the applications out there today good or bad? And I think that's the right approach to be having, and thinking is not price first, but it's quality of product first and quality of problem.
That's well said. Thank you. So one quick question from me to you guys, and then we'll go to the audience for questions. So one thing I was wondering was, are there network effects? Is this kind of like a winner take all market for decentralized exchanges and liquidity? Or is it the case where, let's say I'm a developer and I'm building an enterprise application and I want to tap into Filecoin. Could I integrate with more than one decentralized exchange service to make sure that I have redundancy there? How do you guys think about that?
I think about it a lot. So one of the value propositions that brought us to 0x in the early days, again, back in August of last year, was what you just described, which is the sharing. And when we were building our first implementation way back when on the whiteboard, thinking about it, it didn't have that. That was the critical piece. And so we actually coined this term with Will at 0x, networked liquidity, which is the phenomenon similar to network effects, whereby the entire system grows in value for each new participant. And so we've chosen an order book design for our first product, Radar Relay, that allows people to share. So if you decide, if Hack Summit, you guys, you crazy engineers, you decide you want to build a relayer tomorrow for the hackathon, you guys can mirror or reflect our order book, and all of a sudden somebody shows up and it looks nice and liquid, just like it does on Radar. So think of this as the equivalent to, you launch a competitor to Craigslist, but day one it has all the same inventory on Craigslist. And so we don't think it's a winner take all market, actually, because of the nature of global businesses, right? People are going to compete on fees, token inventory, brand allegiance and brand equity, UI, regulatory strategy, liquidity. So there's so many different axes of competition. I think it opens up this beautiful fragmentation. But if we're correct, then everybody is sharing, and a rising tide for the first time might actually lift all boats in this technology.
I think my view is it's really hard for companies in general to be really good at every customer base and every use case. And I think, and again, going back to that problem definition, how you design, the biggest difference between, the ocean and Radar, it's probably from a technical perspective. And part of the reason that we've chosen technical differences is, I think, what customers we want to get to, in the near and medium and long term, which are different problems. And so I'm not a huge believer that there's ever really a winner take all market or take all, market, where even somebody like Facebook, who has a huge advantage, has sort of, blinders on to certain issues, and those issues crop up, and there are competitors as a result of it. So I think something I like about this space is how, one of the reasons I think blockchain is interesting to people or really attractive to people is this rethinking of how projects, companies, systems, whether economic, financial, or industrial, should be set up, sort of decentralized concept and creating an economy around it. And that naturally means competition. If you set it up correctly, it means faster development cycles and turnover and all good things, I think, for the average person. So, I look forward to, competing in a friendly way, and learning from Alan and others, and whether it's the DEX space or blockchain space, because I think it's going to accelerate not just benefits for the ocean, but benefits for everybody in this chat and end users. And that's, as somebody, who came from a financial services context, I don't like to talk bad about, certain industries or that I've been in the past, but that the focus on what's the right solution for the problem, what does the consumer want, is not always present in other industries that are more mature and have bigger moats and that have established players. Right now, there's no established player in many of these spaces. DEX is being one of them, and I think it's going to be a lot of benefit to all of us in this room to learn from each other and get better products faster as a result of it.
Great. So we have time for one or two audience questions. We'll start with a question from Cloud Dev, which is, what are your thoughts on the Vitalik Buterin's comment? So Vitalik Buterin is the leader of the Ethereum movement, he's the figurehead, which is, I definitely hope that centralized exchanges go burn in hell as much as possible. And the second part of this question is, why is it hard to create an exchange with a great UI? To date, people find decentralized exchanges, and I guess centralized exchanges as well, very hard to use. Are there any UI solutions that you will be implementing? So feel free to jump in, either of you guys.
Yeah,
sure. I can give quick answer. So we laughed really hard at our office when that video went up. You guys should. It's a good one. It's at the 27-minute mark in Vitalik's last TechCrunch thing. We played it at the office here. I think the best answer was actually given by Jesse, the CEO of Kraken, a large centralized exchange, on Reddit, when he responded and said, hey man, we're already in hell with all the regulatory and the fiat banking relationships and all the hacks. He's like, it's hot down here. I forget exactly what he said, but so no comment on sort of the subjective nature of is it good or bad. We talked at length about why centralized exchanges are important. And then in terms of the UI, why is it so hard? We launched in October, which was not too long ago. And if you go and you look back at sort of the progress we've made, we're trying. And we need you guys, we need the engineers, we need users to come knock on our door and say, hey, this needs to be better on our UI, right? We can't design in a bubble. And then the Ocean is launching this month. So do the same for them, right? So let's get that UI right from the beginning. So we're in early days here for Relay UIs.
Yeah, I mean, I think, starting with the UI point, actually a lot of our founding team comes from a mobile games background. So I hope, knock on wood, that people respond well to our UI. And as Alan said, we want to hear feedback from folks. Part of the user experience challenge in this space in general, whether you're Kraken or Radar or us, is it's so early, and Alan and I were talking about this before the call, like, we're only going to be as good, and we both believe that this idea of non-custodial exchange is revolutionary. However, I got to make sure that there are easy to use wallets, private key solutions for different types of customers that I can integrate with, right? So whether it's Ledger or MetaMask today or Custodian X, maybe that means I need to build my own custodial solution. I don't know. We'll see how it evolves. But I think this concept of, and I repeat a lot of the same lines, but I think their importance. Bridging, we talk about time and across industries. I think intra-industry, this idea of user experience is not specific to one product. It's not specific to the Ocean or Radar. It's specific to how products and developers in this space work together. So I think teamwork, is really important. And I really like and appreciate, even just the conversation I had with Alan, who I had never talked to before this call, how collegial and cordial it was. And I think that's really important from a space development perspective and a UI UX perspective, that we all collectively as engineers and people building companies in space look together to solve problems. So that's that. I think on Vitalik's comment on centralized exchanges, I'm a little more in agreement with Vitalik maybe than others in the sense that, as somebody who came from the financial world and saw how messed up centralized warehouses can be, I think there's been, too much of a rush sometimes to get something to market without building something that's in the best interests of the space and consumers in the long run, right? Like I think it's not sustainable for the only access points to be centralized exchanges, because guess what happens? You get Lehman Brothers 3.0 when Coinbase gets hacked, right? And so that's not necessarily a good outcome for the space either. Mt. Gox is an example, right? Like I'm somebody who was active in trading at Mt. Gox, and the reason, part of the space develops quite quickly, but why is the space not more developed than it is today? I think Mt. Gox is certainly one of the reasons where a lot of people got burned and decided not to come back for a while. So I do think it's important that as we look to build solutions in a decentralized blockchain way, we're very conscious of not repeating past mistakes, right? And so we have a great opportunity that there's a blank sheet of paper out in front of us, and we can design, whether it's exchange system or other decentralized application system, from scratch. And it's wonderful. It's fantastic. I think that's why you see so much energy in the space. It's why there's 16,000 people at the summit. I think we should not take that opportunity lightly, and we shouldn't take shortcuts for financial gain, in my own view.
That's well said. Thank you, guys. So we're just about out of time here, but before we part, I just want to give you the chance to just let the audience know where they can go to learn more about your projects. And audience, we're going to be concluding today's session with one more session after this, which will be on crypto gaming, where you get to see some upcoming games being built on the blockchain. And so, Alan and John, feel free to tell us how we can learn more about your projects.
Sure. So we're the ocean. It's, our website is theocean.trade. As we've talked about, we're a 0x relay and decentralized trading platform. I think philosophically, we have a specific place we want to go over the next year, and that's why you see us. And I think something we're very conscious of is connecting with the right teams and right partners in the space. So as an example, we're partnering with, Trust Token and TrueUSD to help smooth some of those UI, UX experiences. So theocean.trade, we're launching mainnet for trading in a couple weeks. If you visit our website, you can register now. If you register now, you'll get significant discount on trading, and away we'll go.
Thanks, John. And Alan, how do we learn more about your project?
Yeah, first of all, thanks, Ed, for the invitation, and thanks to the group for great questions. I was following on the sidebar here. It was a lot of fun. So if you want just a light touch, just to hear what we're up to, I would recommend our newsletter. So hit radarrelay.com, go drop your email in. If you want a deeper touch, Twitter, right? We're pretty active there. If you want to engage, Telegram. And if you want to talk about partnerships or look under the hood, kick the tires, you can email us at outreach@radarrelay.com or visit our API SDK website. And just a plug for the next session, I think you guys should stick around for crypto gaming. My friend Alan, one of our investors, is actually on that panel, and I think it'll be
I agree. Well, thank you, guys. It was a privilege having both of you. I learned a lot. The audience did as well. Thank you for being so generous with your time, and good luck with your projects.
Thank you.
Yeah, thanks. Bye, guys.